Welcome to Fitz Factor, the show where you learn how to master the stock market with Dan Fitzpatrick, the stock market mentor. Dan is a savvy trader. He's featured regularly on Fox Business, CNBC, Investors Business Daily, and SiriusXM Radio. In this podcast, Dan shares his insights on trading, life, and attaining long-term success in the market.
The market doesn't care about your predictions. I see it all the time. You'll see it where these analysts, technicians, traders will come on TV before an earnings report and talk about how, this is what's going to happen or that's going to happen. Frankly, they don't know. They're kind of pretending like they do, and actually they're on TV, so they must know something, right? They really don't. I've been one of those guys, trust me. You're guessing if you're asserting. So you have to understand that hope isn't the method that a lot of people think it is. And the very, very obvious trades are the ones that never work. You have to understand that as a part of your preparation. If it's obvious that this stock needs to be bought, it's typically because it's gapped way up and you're getting this sense of fear of missing out. So you got to buy the stock. That's typically the exact wrong thing to do. So it's just important to understand this. The only thing you're in control of is your emotions. You cannot control what a stock does, can't control what the market does. If you could, everybody would, and then the market wouldn't work. So just give way, embrace the horror that you are not going to be able to move a stock one penny in your favor. You can't stop your position from losing money by hoping and praying and willing and wishing. The only way you can do that is to sell a losing position. The only way you can make money is to hold a winning position for as long as the market will allow you to. And that's a real critical point. The market will basically tell you when it's time to take profits. If a stock is going up really, really steeply, look, ride the lightning, fine. But at some point, you want to start getting off before the stock peaks. You have to understand that this is a part of your reaction system. When you're making too much money on a position, start pulling it back. Start booking your profits. So this is what you really want to do right now. Write your rules down. But more than that, write a rationale beside each rule. Sell into strength. Why? Okay, well, write that. Insert a stop. Why? Like, make sure you know your why on every single aspect of your checklist, and you're going to find that predicting that's somebody else's deal. You're prepared, and you're going to find that over time, we'll just say you're going to be making a lot more money and you're going to lose a lot less than you think you will, okay? So hang tough. You can do it. I promise you. Now, let's talk about mindset today. Your mindset is way more important than your setup. A good trader, think about it this way, a good trader with an average setup is always going to outperform a bad trader with a perfect setup. See, it's not the setup that's the most important part. It's the person using that setup. When you're emotional, when you're not really working from a process, when you're kind of an emotional trader, basically you're a bad trader. I'll just put it that way. This time is different is something that you say a lot. But that's typically, this time is not different. And the worst thing that can happen to you is that the first time you say this time is different, you make a lot of money. Trust me, that's the road to losing your asterisk. I'll tell you that for sure. So the question for you is, do you have the mindset to stick to your process? Emotional capital matters a heck of a lot more than financial capital. Think about it this way. If you've got a big account, but you've also got a big emotional mindset, that's going to lead to big losses. Big account, big emotion, big losses, small account. Like they say, I'll show me a good trader makes $1 bazillion, right? Well, hey, you want to be a millionaire and be a bad trader? Start with 10. You'll wind up with 1. So be mindful that your mindfulness is really the thing that's going to get you over the edge. If you have a small account and you have little emotion, because you've got a process and you're able to just prosecute that process, you've got a little account. You're going to gradually grow that account, and at the same time, you're going to gradually refine your process. Mindset. That's what it takes. You've got to have a process. I've said this a million times before. I could teach anybody to trade in a weekend. The smart people, probably a day. Okay, now, trading well, putting the things that you know into action, that can take a lifetime. And some people never get it. And why? Are they stupid? No, it has nothing to do with that. It has to do with mastering your mindset. In matters of money, the mind matters. Think about it that way. Also, you'll hear people say, or sometimes you've got a lot of self-talk within yourself where you go like, damn, why did I do that? I can't believe I did that. I can't believe I did that. Okay, you need to understand that you literally have no control over your action. I'll say it again. You cannot control your actions. It's impossible to. When you put your finger, you put your hand on a hot burner, can you control your reflex of pulling that hand away? No. Now, I think it was in Lethal Weapon 1, Gary Busey did that, but that was in the movies, right? The point is, on certain things, you just react, you can't control it. That is the reflex of actions. You can control your thoughts. When you control what you're thinking about, your thoughts then control your actions. This is another reason why I often tell the people that I work with that your mindset matters and your self-talk matters. You don't want to be, if you're having a hard time, like maybe you make some mistakes or something, maybe you took a big loss, don't sit there and pound the table and say, God, I'm so stupid. I can't believe I did that. I'm never going to make it and all that. When you're telling yourself that kind of stuff, you're berating yourself, you're chastising yourself. The mind remembers. We hear what we say and we become what we hear. So stop all that negative self-talk. Keep your mindset where it needs to be, which is positive, humble. Hey, I'm not an expert. I am a student of the market. I'm not a market analyst. I'm not a trader. I'm a student of the market. And if you consider yourself to be a student of the market, you will also realize that you need to be a student of your own actions. And when you're looking at your actions, then you back up and you say, well, what am I thinking about? And part of that is, and this is for another time, getting your pre-trade set up and what I call knowing your why. Why exactly are you trading? And if you start there, then you will build a process and a proper mindset to help you pursue your why and then ultimately get there. So what I suggest you do now is think about your mindset. What are the things that really, really drive what you're doing in your trading? If you're really struggling in a volatile market, think about it. Are you a thrill seeker? Like, what's the other stuff that you like to do? Do you like to bungee cord jump? Do you like to skydive naked without checking your chute? I don't know, whatever. Are you that type of person? Well, you may be the person that likes to get in the market and swing really big, and then you're either going to make a lot of money or you're going to lose a lot of money, but one way or another, baby, it's going to be big. Are you afraid of a loss? So you're always trading really, really super small. Are you greedy, where you're always chasing, you're always going in big right at the top? Think about what exactly you do and why, the underlying reason for why you do it. If you can develop that kind of sense of self-awareness, and it's not easy, sometimes it's really hard to look in the mirror, but you got to do it. If you can do that, I promise you, you're going to be a less emotional trader. You're going to be kind of boring, but you know what? I've never found that counting money is actually boring. It's just not exciting. Now, I want to talk about the power of rules-based trading, not discretionary trading. Hey, I think this is going to move. I'm going to buy some. But like real, true rules-based trading. When you have rules for trading, they reduce your emotion, and at the same time, they increase your consistency, which, by the way, reduces your emotion even more. When money's involved, we do get emotional. This is how casinos stay in business, actually. But this is why paper trading without rules can be harmful, because you have no chips on the table. You don't have any stakes in the game. And so it's not paper trading, it's play trading. And well, I'll see if this works out. Maybe it will, maybe it won't. You put your money on the table, you're going to have a very, very different experience. But if you have rules, paper trading can actually be really invaluable. It can teach you a lot. It can help you learn not about yourself per se, because you've got your rules. If you follow your rules, that's all you need to know about yourself. But if you're paper trading along with your rules, you're going to learn whether your rules are good or whether they need to be adjusted, whether they need to be scrapped and start over again. But paper trading without your money in the game is fantastic as far as learning if you have rules. So it's not about the trading, it's about applying the rules to these charts that move up and down. This is one of the reasons, by the way, with Trade Track, my tracking tool, you have an opportunity to have multiple accounts. You could just trade paper trades if you want. Again, have rules. Don't get on that thing if you just want to fart around and trade. But if you have rules, you can get on there with no money and trade. Learn what you're doing right, learn what you're doing wrong. Or if you have a capital account, and I think you probably do, open up a paper trading account too. You can have two, you can have three, have as many accounts as you want. And then you can really, really see whether your rules are working. Now, even if the rules are imperfect, and you'll find you're always kind of adapting or tweaking, your rules will absolutely outperform your impulsive decisions, because impulses in trading typically come from what we see. We see something move. It's like a largemouth bass with a shiny object. It snaps at it only to find out that there's kind of a hook there, and it doesn't really work out well for the fish. Okay, so your rules, think about them this way. Your rules are like the guardrails in a bowling alley. Those things that keep you from throwing a gutter ball. I really like those. I wish they had those when I was a kid. But the point is, your rules are the rails. As long as the guardrails are up, you're never going to throw a gutter ball. But if you take the rails down, you better be a good bowler. All I can tell you is I need the rails and I need the rules. Think about golf. I don't know, what do the good players shoot? Like in the mid 60s, something like that. I always heard like 72 was par, something. I shoot a 72, but then I don't know what I'm going to shoot on the back nine. But think about it this way. When you're golfing, every single shot except 18 of them is a miss. Your goal is to get it in the hole. It takes you 60, 70, 80, 90, for me, probably 120 shots to actually be successful 18 times. The rest of the time, other than those 18, you're just trying to get it close. Okay, Roy McAvoy, Kevin Costner's character in Tin Cup. I love that movie. I could recite it from memory. On the 18th hole, he was in play to win the U.S. Open. What did he do? He had to make this impossible shot. I think it was on his 7th try where he finally made the hole-in-one, and everybody went, yay, yay, that's awesome. Okay, he overcame his hazard. He overcame not being able to make that shot. And in the process, he lost the Open. Not a good outcome for Roy. However, he did win the girl. And he got paid a lot of money because it was only a movie. So there's that. But the bottom line is this. If you're sticking to your rules are going to keep, I'll mix metaphors. Your rules are going to keep the bowling ball in the alley. They're going to keep your car on the road. And so rules-based trading is, in my mind, that's the only way to trade. If you're not using rules, then you're really not trading smart. In fact, a book that I'm about halfway done with it, it's called Trade Smart or Don't Trade at All. And SMART is an acronym for a process that I use in constructing every single trade that I make or that I suggest to our members at Stock Market Mentor, and options too, frankly. It's all the same, really, when it gets to this. The first part is your strategy and your stock. Do you have a strategy? Those are where your rules come from. Then you find your stock. After that, you have to look at the market, because about 90% of what happens with an individual stock is really kind of dictated by the market environment. And next, is whatever you're trying to do, is it attainable? Have you seen the chart before? What happened with a similar setup? Is this attainable, or are you just like hoping and praying? And then, is it repeatable? In other words, again, have you seen it before? Is this strategy that you're using, is this trade that you're taking something that you will take again and again and again, and you have taken it before? This is part of your strategy. If it's not repeatable, it's a one-off, it's a discretionary or random trade, you don't want to be making those trades. Those are the trades that losers take. You want to be a professional, same thing again and again and again. And finally, the T in SMART is tracking. You need to be tracking your trades, because if you're not tracking your trades, the other four things don't matter. Strategy, what's the market doing? Is the trade attainable? Is it repeatable? If you don't know what your results are relative to your prior results, if you can't see trends in your own trading, there's really going to be a difficult time for you to grow. You're going to have a time trading. So what I suggest you do is write your rules down. Remember, what I'm talking about here is how powerful rules-based trading is. You eliminate all these variables. That's how I run my life. My wife and I will be doing something, and we'll kind of be trying to make a decision on something, and I'll find myself all the time saying like, no, do it this way. We eliminate variables. That's all about, is just eliminating variables. If you do that in trading, you will do a lot better. And the way you do that is to focus on your rules and know that you're taking big losses out of the equation. You're putting yourself in a position ultimately to win. Follow the rules, collect your money.